This was not supposed to happen, but things got wild. And now Shiba Inu is not the same anymore. Something just occurred that might put us on the brink of something very unexpected. But what is actually going on? Well, let me explain. Disclaimer. Unfortunately, today isn't a great day for Shiba Inu. The price is falling, and a lot of people are feeling pretty unhappy about it. This is mainly because many investors had high hopes for Shiba Inu to keep climbing. They believed in its potential and were excited about its future, especially after its impressive rise last year. And now, with the price dropping, their investments are losing value. This can be really stressful. But what's actually going on? Why is Shiba Inu down today? And is there any potential for an upward movement? Well, let's find out. It all started with some pretty positive news about Ethereum. Top experts have been hinting that the approval of Ethereum ETFs could be just around the corner, possibly as soon as July 2nd. The SEC has already taken steps to allow the listing and trading of 8 Ethereum ETFs by approving rule changes. However, there's still one major step left: the S1 registration forms. These forms contain detailed information about the ETFs and are essential before they can go live. And this all makes sense, because before these ETFs can be offered to the public, they need to be thoroughly reviewed and approved by the SEC. The S1 registration forms provide all the necessary details about how the ETFs will work, ensuring they are transparent and secure for investors. Without these forms, the ETFs can't be launched. And this is where things get interesting. The potential approval of Ethereum ETFs could be a pivotal event for the crypto market. It might open up new investment opportunities and drive further adoption of digital assets, just like the Bitcoin ETF did back in the day, which caused Shiba Inu to triple in price. As the SEC nears its final decision on the Ethereum ETF, the community is watching closely, anticipating its impact on both institutional and retail investors. And behind the scenes, something crazy is happening. Ethereum whales have bought $2.45 billion worth of Ethereum in the past 3 weeks. This is a huge number and really highlights the excitement building around the upcoming Ethereum ETF. To put this into perspective, $2.45 billion is an enormous amount of money. It's not just a sign of confidence, but a massive vote of anticipation from big players in the market. These large-scale purchases show that major investors are gearing up for what they believe could be a significant increase in value once the ETFs are approved. This kind of activity clearly shows how much excitement and expectation there is for the Ethereum ETF. With so much money flowing into Ethereum, it's a clear indication that investors are preparing for a potentially big shift in the market. However, while Ethereum whales are that excited, we see quite the opposite scenario with Shiba Inu. Today, Shiba Inu is experiencing a decrease in whale activity. On-chain data from Into the Block shows a 56% drop in large transaction volume, indicating a significant reduction in whale activity over the past 24 hours. This sudden drop has sparked a lot of discussions. People are asking how this is possible and what exactly is going on. Since Shiba Inu was built on Ethereum and still operates on the Ethereum blockchain, many believe the two should be closely linked. So why is Shiba Inu not riding the same wave of excitement as Ethereum? Well, let's find out. The Shiba Inu price is trying to find its footing in a very volatile market. This past week, we've seen the crypto market experience wild fluctuations as investors try to predict the Fed's next moves on interest rates. Right now, the market is trending down, with many crypto assets starting the week on a sour note and several tokens, including Shiba Inu, declining. In the past 24 hours, Shiba Inu has dropped by 5%. The reasons behind the drop in Shiba Inu whale activity are varied, but the exact cause remains a mystery. The overall volatility in the cryptocurrency market could be making large investors hesitant to jump in. Some believe that current profit-taking trends might have led whales to reduce their positions, resulting in less activity. With the big players stepping back, smaller investors are left to figure out what this means for their investments. Many are in a wait-and-see mode, looking for more stability before making any big decisions. And here's something interesting. The recent market turmoil has led some to speculate that the eagerly awaited altcoin season might not materialize after all. Analysts, including prominent financial expert Murad Mahmudov, have put forth interesting reasons for this outlook. Mahmudov suggests that a significant altcoin season isn't likely due to a decline in the cumulative excess savings of U.S. households. Recent data from the Federal Reserve Bank of San Francisco reveals a notable trend. Americans have largely depleted their accumulated savings. These savings soared dramatically from March 2020 to August 2021, reaching an impressive peak of over $2.1 trillion. This surge was primarily driven by a sharp decrease in consumer spending during that period. According to economists at the San Francisco Fed, this peak in excess savings marked a unique economic phase, which now appears to be drawing to a close. As households have increasingly spent down these savings, Mahmudov and others argue that the potential for another major altcoin season may be dampened. Despite the depletion of these savings, there's optimism that a strong labor market could sustain consumer spending. However, recent earnings reports from major companies like Amazon indicate that consumers are becoming more cautious with their finances. This newfound frugality among Americans, compared to the spending spree of 2021, suggests they're less likely to gamble on risky alternative cryptocurrencies. Murad Mahmudov suggests that with consumers tightening their belts, the days of a major altcoin season may be behind us. He believes that instead of widespread enthusiasm, we may only see occasional spikes in value from trendy cryptocurrencies that capture investors' fleeting attention. The most you can hope for is an occasional well-timed spike by a particular flavor of the month outperformer from the crypto-native PvP hotball of money, he said. The analyst also highlighted another crucial factor: the oversupply of altcoins in the market. Altcoins continue to proliferate, increasing both in number and total market value with each new token launch, Mahmudov pointed out. Comparing the current market cycle to 2017, he noted that back then, the market was much smaller. This meant it took less investment to see substantial returns, and creating new tokens was far more challenging. The issue of dilution is starkly evident today. Just on the Solana network alone, over 1 million tokens have been launched since April 1st. And this is just one blockchain network among many in the crypto ecosystem. To put this into perspective, imagine adding over 1 million new products to a store in just a few months. It creates a scenario where each individual product competes for attention and value, making it harder for any single token to stand out or maintain value over time. However, despite recent challenges, Shiba Inu being the top project definitely makes it to capture people's attention. Analysts are closely watching where its price may go next. Recently, Michael's analysis highlights Shiba Inu's struggle to recover amid a broader market decline. Since June 6th, Shiba Inu has faced ongoing losses. Zooming out, Shiba Inu has been on a downtrend since early March, with lower lows and lower highs observed on weekly charts. Interestingly, despite this bearish trend, a bullish pattern known as a bull flag has emerged. This formation began with a sharp 370% spike in March, forming the flagpole, followed by a consolidation period forming the flag itself. In technical analysis, a bull flag often indicates a temporary pause in a downtrend, potentially signaling a future uptrend if Shiba Inu can break out of the current downward channel caused by market turbulence. Michael anticipates that Shiba Inu could soon see a breakout from this pattern, potentially signaling a reversal to an upward trend. The analyst, known for using Elliott wave theory to predict price movements, highlighted that Shiba Inu is currently in a typical 5-wave pattern. Currently, Shiba Inu is in the 4th wave, which often sees price declines. However, the analyst anticipates the 5th wave to start soon, potentially breaking out of the current downward trend in the coming weeks. If this breakout happens, the analyst predicts Shiba Inu could reach a target price with 3 zeros, representing a significant 398% increase from its current value. This means the price would move up enough to drop one of its zeros. And removing a zero from Shiba Inu's price is a big deal for many, simply because it represents a substantial increase in value. It not only reflects strong investor confidence and market optimism, but also attracts more attention from potential investors looking for cryptocurrencies with high growth potential. This kind of price movement can also generate excitement and speculation, driving further momentum in the market. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.